Good evening, everyone. Time for this week's silver update. You are looking at a chart of the US dollar Swiss franc, and this actually goes all the way back to 1970-71, which was the end of the Bretton Woods official exchange rate free-floating gold-backed system, and a change to a free-floating exchange system. And I've drawn two trend lines. One is the tops down to where we are, and one is tops at the plaza chord and goes to a projection of where we'll be. You can see that the Swiss franc was worth $4.2, and today the Swiss franc is worth $0.81, so effectively the dollar's lost 80% of its value since this time. Now, the Swiss franc is not a euro-based currency. It's a gold-backed independent currency with a country of sovereign citizens who bear arms, etc. So this is just to give you an indication of the tremendous loss in value the dollar has sustained since the time that it went to a free-floating system. Now I want to switch over to the Japanese yen, because we are heading towards a collapse of the dollar against the yen as well. You can't go by the dollar index because it's a basket, it's a rigged basket, so you really need to look at the cross rates of these currencies, and we're on a similar downtrend to nothing. So the US dollar is in a tremendous bearish trend. It's accelerating against the Japanese yen and the Swiss franc, and I wanted to segue into silver, of course, because that's the most important chart that we want to look at. And when we go out to the daily, we can see that we have crossed above every line of resistance that I drew. We'll draw it like that because we had a fake out, but we came back up. So we're almost through this last resistance line of about 39.20 or so, and when we add the MACD in, as I've been pointing out, the MACD has crossed over the positive line, and if we want to look at past incidents of the MACD crossing over the positive line, we're looking at moves like these. So what's the projection? Where are we going to go with the price? Well, I wanted to start off by emphasizing the reason why you buy markets. Now, there are a lot of technical traders who trade things like stochastics and MACD indicators, but ultimately, if you're going to ride a bull market, you need to use the indicators to enter a position that you are already convinced is going to happen. So, in other words, if you're bullish on silver, then the purpose of these indicators is to give you entry points, buy points. And we'll do our last cross right here. So you can see we're at a buy point. I pointed out in the last few days that we're at a buy point, and you should have already bought. I recommended some buys here and here and here, but we're on our way back up. We're going to surpass this price. But I wanted to look at the fundamentals because ultimately you can't with confidence buy any market without having an understanding of the fundamentals. If you're just trading the technicals, then you're going to be tossed out by certain gyrations in these indicators. So you've got to have an understanding of why the fundamentals are going to ultimately determine price. And the first thing I want to look at is the American Silver Eagle on Wikipedia. Now, if we look at the total mint, the total number of Silver Eagles minted in history since 1986, we've got a figure using the 2010 number, and of course you can see we're exploding in mintage. Just as far back as 2005, we had not at 9 to 10 million, and last year we're doing 4 times that, 3 times that. This year I would estimate maybe 40. We'll just go with 40 and say this number is 300 million total Silver Eagles minted. So just a quick and dirty amount of math. If we do 300 million times the current price, and we'll say 40, we're talking $12 billion. So the current outstanding value of all Silver Eagles ever minted is roughly 12 billion. Now, that is a pittance, and compared to the amount of debt we're talking about with the debt cap and the debt raising and the debt ceiling and the budget debates, I wanted to put this in perspective as to how low this market cap is to the amount of money we're talking about. So I'm going to jump over to a price history of 1979, and this is flashback.com. I can't vouch for the accuracy of these numbers, but I think they're fairly right. And I took these numbers and put them in a spreadsheet and used the high, the nominal high that silver reached that year. And what I did was I created a spreadsheet using that information. So in this spreadsheet you can see that we had in 1979 we had federal spending of roughly $500 billion, and in 2011 we're at about 3.7 trillion. The federal debt was roughly 829 billion, and we're roughly at 14 trillion today, and as you know, we're debating about adding another 2 to 3 trillion on top of that. The cost of a new car was roughly 5,000. I put for today 25,000. I might be right, I might be wrong. We're not sure. Median household income 16,000, today 50,000. Cost of a stamp 15 cents, 44 cents. Cost of a gallon of gas 86 cents, today $3.56. And the silver price then was $48, today it's $40. So what I did was I added all of these prices together, and then I divided by the number of prices to obtain an average. And the average of all these prices is $295. So if silver today were priced at the average increase in price of federal spending, federal debt, cost of a new car, cost of a home, cost of a stamp, cost of gas, silver should be trading at $295 an ounce, but it's trading at $40. Now, the reason I'm doing this analysis is because a lot of people are saying, and you read this on the boards very frequently, you have people saying, well, when silver's 1,000, then the price of a loaf of bread will be 100, so what's the point of what's silver worth? Well, that's a bogus argument, because if the price of a loaf of bread is $100, then the price of silver is going to be $10,000. So the price of silver is still so ridiculously below this price. The average price increase that has occurred since 1979 for all these things, silver is still below its nominal high of $48. It's at 40. So silver is, in my opinion, the most undervalued asset on the planet. And that's extremely important when you're looking at charts like this. And here's why. Because you don't buy an asset because it's going up in price. You can if you're a technical trader. If you're a technical trader, you would have bought silver here. And you would have bought it here. And you probably would be buying it right here, which is today. But that's not why you buy silver. You buy silver because of the fundamentals. And the fundamentals tell you that silver is still undervalued by at least six-fold and possibly seven-fold, just as we stand today. So if we look at the total amount of eagles that exist, their current market price is roughly $12 billion. That is a pittance compared to the amount of money they're talking about today. So you have to believe in the fundamentals, or these types of moves, and I'll back out to the daily so you can see, actually further back to the 8-hour. So you can see these types of moves will shake you out. If you don't have the confidence to understand the fundamental value of this asset, these types of crashes, which were orchestrated, of course, but nevertheless, if they were free market crashes, it doesn't matter. If you don't believe in the fundamental value of this asset, you won't buy it on the lows. And as I've said before, I went long silver in the late 90s, and my big purchase was here. I bought more here, and I bought some more here and was wrong until I bought a lot more there, and I bought more here, and I bought more here. And you should probably be buying more here. So the people that are telling you this is a bubble and will back out, and that's too far. Let's clear the indicator so you can see the chart clearly. That's not a bubble. That could have been a bubble there, and that could have been a bubble there, but it's not. It's going higher. It's going to exceed this price, and you still have a really cheap price. You're still buying this asset at roughly 1/5 to 1/10 of its current value. Don't think about bread, don't think about gas. Just think about the fact that this asset is 1/10 of what it should be right now. So at $39, you should be buying silver with both fists as fast as you can, because it's probably not going to be available once it crosses this line. And we'll talk to you next time.